The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. This is by an unknown author. If you believe in yourself, so will others. Market-wise, let's take a look at it out here. We have the Dow Industrials up 47, NASDAQ up 32, S&P's up 8, gold contract flat at $1,224 an ounce. Silver up 9 cents at $17.66 an ounce. Platinum up $6 at $1,174 an ounce. Copper down 2 pennies at $2.93 a pound. Light sweet crude down 12 cents at $60.42 a barrel. Bonds are getting smoked once again, folks. You have the 10-year down 21.6, 127.11. 30-year off 2 full points plus 9 ticks at 153.10. And King Dollar up 1,085 ticks at 94.26. The euro is down 144 at 113, and the yen is trading up 77 at 120.02. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay, so check it out. We are at highs. The cash S&P right now, we're going to bisect and dissect not only the SPY, we'll get our heads wrapped around the cash S&P. So the cash S&P, we are trading at 2130 right now, and the high that it's taken out is 2125.92. Now, the further you get away from that 2125 number, the bottom line is that that would be saying that, yeah, you're going to have a leg up in the marketplace. If we go over to the SPY, the SPY, what we're going to see is this. We take a look at the SPY. The SPY right now is trading at 213.07. The high that this is taken out right now is the 212.48. The thing that gets intriguing is still at 212.97. That was established. Let me pull this up for a second because you're going to see this. This is a weird day out there, and it's like, did that number really happen? Which is the 212.97, which was on December 18th. It spiked up to that level, but I seem to remember that, and it was like, those spikes are always weird because we end up closing that day at 206.78. And I don't remember us going down that dramatically. But bottom line, so the number I'm going to deal with here is the high of the 27th. The high of the 27th was 212.48. Right now, you're at 213.26. Now, if we go over to the futures, as we come into this close here, this is the number that you're going to be looking at in the E-minis. The futures thus far, when they went topside this morning, they are at 21.27 right now. A close over the aspect of 21.22 would say, hey, guess what? You're going topside. We haven't had any volume whatsoever. Now, this is really a trip inside the future market. Let me put this on a 10-minute. You'll see how this is shaking out because this in itself is like it's been all day without volume. You had the spike at 9:30 this morning, but that was it. That spike has got us to 2119.75. So we'll see where this shakes out coming into the close. But bottom line, that SPY, if it stays up at these levels, guess what? You can go higher. You close underneath that level, and that's going to be a failure just once again. NDX 100. We take a look at the 3 Qs. What do you have with the 3 Qs? 3 Qs are trading at 110.19. The the way that the 3Qs are set up right now, they have 12 million shares. Your 12 million is going against 31 million. We are at the lows of the high, so that 111.16 is game. That's how this is set up at this particular point. We'll see also coming into the close, does it in fact close under the 110.02? So right now, the 3Qs are basically about 17 cents higher than the low of the high. The IWM, we take a look at the Russell 2000. Russell 2000 has some juice into it out here today. Russell 2000, the IWM has 20 million shares traded. It's lagging, but bottom line, 20 million shares is not bad. We are at 124.98, and the 120, well, that's the low of the high, 124.98. So we'll see whether this gets into this 125.37 area. The 125.37 was the high of April 27th. Gold contract. What do we have with gold? Bottom line, gold wants higher price, folks. They can't whack this baby down. They've tried over and over and over again. We hit the 1232 area out here today. You've done 109,000 contracts. We had wide price spread, accelerated volume last week. I suspect we're going to build a little bit more cause. The gold contracts in an ABC structure up to about the 1246 area. I suspect what you're actually going to see, though, is that this thing's going to run up into the highs that were created out there in January. The XAU, HUI, we look at the XAU first. XAU also has strength, wide price spread, accelerated volume, had the move behind it. The XAU is trading at 74.76. It's over its March downdrafts. What is pretty wild is this, is that normally you would have the HUI stronger than the XAU. The XAU is actually a little bit stronger than the HUI. And the difference would be is that inside the XAU, those equities inside the XAU can hedge forward more than 2 years supply going forward. So, we'll see where that baby does shake out. The HUI, that's the Gold Bugs Index. What we have with the Gold Bugs Index right now is trading at 180.52. And what we have there, that is continuing to build cause to get up and over this whole March downdraft. So the bottom of that is 179.80. We are over at 180. Both of those folks look to go into the highs of January 21st. The thing that's pretty cool about this rally inside the gold market, it's really a stealth type of rally. It's been slow, meticulous on the way up. You get the XAU, the HUI, and gold itself up about 18% off those bottoms. By the time it gets up to the swing highs, you get about a 25% move, which is pretty amazing. What will also happen up there is this, and this is where it's going to get really close. And this is always cool in the aspect of how looking at markets, number one, and where you want to be buying, where you want to be selling. What you're going to see is that inside the metal contract itself, the metal contract has just overtaken its 200-day moving average. And we've been over that average like 3 times since about 2013. Each time it's failed. It stayed over that average 3 or 4, well, maybe a couple times 5 or 6 trading days to 15 trading days. Then it failed. The take goes like this. The XAU, the HUI, is approaching it. I suspect what we're going to see is this. You're going to see a surge going forward. You're going to see us get up into this January 22nd high. All the indices will be over that level. What that would do is that there's plenty of folks that love those averages. They'll jump in, and guess what? That'll be our first real major sell out inside the gold equities as well as the silver equities, because that'll be 100% move for move from the January high to the March low, back to the January high, and at that particular point, you can expect you're going to get some kind of a pullback. Bonds. If we go take a look at the TLT, bonds, folks, are in a major ABC structure on the way down. Huge. This bond move is going to upset a lot of different tactics out here. The 10-year bond right now, we came down with a vengeance, high volume. The lows in the 10-year at the 126.06 has volume. Did a counter trend bounce for all of 5 days? It's going to go after this 126.06 again. Right now, we're at 127.12. You break that with volume, you get a big ABC structure on the way down. King Dollar. Now, check this out, because King Dollar, you have the ticks. We're up really nice on the ticks. But this is an ABC structure on the way down, too. We've done 35,000 contracts. This is just a fast counter trend bounce on price. If this was a index that wants to go higher, it'd be pushing about 50 to 100,000 contracts. We get 35. Monster ABC down. We're trading at 94.30. You can expect we're going to see 88 in this dollar. You can stay right there, folks. Come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 48, Nasdaq's up 34, S&Ps are up 9. Let's go to Mark in Boston. Hey, Mark, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day out there?
Of course.
Sweet, man.
Beautiful sunny day here.
That's great to hear, man. No doubt. Is it like 75, 80? Yeah?
Yeah, probably about 70s.
Sweet.
Yeah.
That works. That's
yeah.
summer, no doubt.
And speaking of Boston, I crack up every time I hear your Boston accent, Tom. You've been down Florida for a long time now, and you still have that bar. You can't take the Southie out of Tom, right?
Yeah, you know what's funny is that inside Boston in particular, right? There's no doubt. It's once you're in the city, and that's the accent, and that's it, man. It's a beautiful thing. I'm digging it. We're the only ones that speak correctly. So what do we want?
That's it. You know it.
What are we going to look at?
Well, I want to look at, I call it NRF, but I have a question for you about dividends before I get into that.
Okay.
And, ex-dividend date.
Yeah.
If I buy three days before the ex-dividend date, then I should be on record, correct?
They will tell you the record date for the dividend. When what happens is this, is that when they're going to announce the dividend, they tell you the exact day that you have to own the stock for the dividend.
Mm-hmm.
That's how that works.
And then, here, 3-day settlement, so it'd have to be 3 days before that, correct?
That's correct.
All right.
But they make it really clear. What you could do there, the easiest way to do this, right, is you'd call their investor relations, right, and just ask them flat out, and they'll tell you immediately. I've done this before. Do you know what I'm saying? So, because what does happen is that sometimes, let's say the dividend date, could be a month from now. Sometimes, let's just say a dividend is going to get paid June 15th, right? They might block off that dividend date, say, okay, if you want to by May 17th, they can do whatever they want. That's what that comes down to, just so you understand that. Do you know what I'm saying? Mm-hmm. As to when they're paying it, as to what ex-dividend goes at. So that's the easiest way to do it.
Yeah, okay. And then the flip side is on the sell side. Then can you sell 2 days before the ex-dividend date and still be on record if it takes 3 days to clear?
Okay, so I gather what you're trying to do is if you're trying to take advantage of the dividend date in order to...
Yes.
Yeah. So watch how this works. Now, this is... As soon as it goes ex-dividend, folks, let's picture it. This stock that he's looking at is NRF, and it's trading right now at $18.28, okay? Let's just say that this stock pays a 10-cent dividend, right? On ex-dividend date, that stock, let's say if everything else was the same, meaning, the market was the same, because this would changes too, but let's say the market was the same and every stock was going to open at the same price, right? That stock would open 10 cents down. Instead of $18.28, it would open at $18.18. The dividend gets sucked right out of it. Now, that being said and done, we know that the market is never the same every single day, never mind every single hour, okay? So the dividend does get sucked out immediately, So there's not a way that you can just take advantage of the dividend, and try to make money on it. Let's put it that way.
Right. Unless that's why I was asking you, because the settlement date, 3 days out, can I work?
Listen, I know right what you're saying, right? Yeah, and
but you just can't do it, right?
That's correct. Right.
Okay.
Right.
All right. Well, that being said, I already did get a dividend on the stock. But my question is, since it's now going to be included in the REIT,
yes,
is there value that will have to be bought coming up towards the end of May?
Okay, so let's take a look at it. It's NFR we're looking at, folks. No, NRF. Okay, so this is North Star Realty Finance. It's a company that does investments in real estate debt, real estate securities, and net lease properties. Now, I was looking at their numbers. It looks to me like it's all operating. Well, 92% of it is operating real estate, which is good, because they're not. It's not so much securities and the real estate debt. Now, did they just take over a company? Because I can see that in 2014, their income's $681 million, but in this year it's going to be $2 billion. So they're going to take in 1.4 billion more this year. So what?
Yeah.
That's what you're talking about. What do they throw a REIT into this, or do they throw a couple other companies into it?
They've shifted their portfolio around quite a bit to be more diversified, I think, is what's going on.
Yeah, they must have bought someone too. But looking at it, I like when I first pulled it up. It's always more risky when you're in real estate securities, not necessarily the debt, but the securities themselves. Okay, they can fluctuate. The operating real estate. So here, give you a breakdown. The operating real estate is $669 million. The real estate securities $146 million. The debt's $145. So it's good to have operating real estate. That's the bottom line, because the company itself has more control over that versus then we know the stock market goes up and down. These securities go up and down. The operating real estate, that's a net lease type of deal, and that's the business they're in. They're paying 8.5% or something, right?
Yes.
Yeah. So it's not a bad deal. I mean, you wouldn't expect a lot of upside in it, but you're not going to expect a lot of downside in it either. You're at $18 and. Let me just pull this back a bit.
But see, it's got to be included in the MSCI REIT index.
Yeah.
And so I guess my question is, our fund's going to have to buy shares.
They would.
Okay.
Not all funds, but they would. What happens is that any type of. Well, there you go. See, Vanguard, I just pulled this up here. I'll pull this on the side in case you're watching Target TV so you can see it. These are the last filings, and you can see Vanguard had to buy more. I didn't have to, but more than likely did because they have plenty of funds. So that's probably one of their funds. They bought $5.8 million. Brookfield Asset. Oh, this is interesting. But Brookfield Asset, that's another real estate company. They bought 10 million shares. You got another hedge fund bought 8.2 million. Let me just see where the sellers come from. Yeah, there's all buyers in there. So they did some kind of a deal to go from that 680 million to 2 billion. And there's been a lot of other people that have been in there buying it for whatever that reason is.
Okay. All
okay,
right.
brother.
Hey, thanks, Tom.
Have a
Appreciate
great
it.
one, man. Have a safe one. You stay right there, folks. We're coming right back. Dow Industrials right now up 41. Nasdaq's up 32. S&Ps are up 8.5. And we're at 21.27. The magic number out there, folks, is 2122.75. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials are up 40, Nasdaq's up 32, S&Ps are up 7.5. Inside the Dow, so the Dow Industrials are also at a new all-time high, folks. Inside the Dow out here today, leading it higher is Johnson & Johnson. That's up $1.48. Apple is up $165, trading at $130.42. Home Depot is up $112 at $114.47. And Goldman Sachs is up $1.90, trading out at $204.87. Bringing it down, lagging it, you have Chevron down $1.49. You have Coca-Cola off 25. ExxonMobil's down 38, and Procter & Gamble is down 31. inside the NDX 100, let's take a look at what the leaders and the laggards are. You got Altera. Altera is up 239. In fact, let's go over and look at Altera. This is a classic, man. This is pretty wild. This is just a classic inside even the context of takeover talk, rumor talk, all of the above. What you have with Altera went on a tear when you go back into March 27th. What had happened March 27th is that David Faber at CNBC came out and said, hey, listen, Altera is talking with Intel. Bottom line is that the stock goes from 35 to 45. They had to halt the stock. What does it do? Has nice volume. Goes sideways a few more days. Altera is saying that no, they're not talking with them. The one shot on the 9th of April, Altera did get down to $38, rejected that price, end up closing out the day at 43, comes back, pulls back again with light volume, pretty amazing actually. So it goes from 45, pulls back to 39, anemic volume. There was no sellers on the way back, 1.5 million versus 7.2 on the way up. What does it do? Breaks topside again. Last week, has some juice behind it, breaks topside again. I suspect what we're going to see is that, you know, the rumors are still out there, but bottom line is that you can expect that Intel is probably going to buy them, you know, because the setup, no doubt, is there, and it's there pretty good. So inside the NDX 100, that is the leader out there today. You have Discovery Channel, that's up $1.27, and that's the K shares and the A shares. Symantec follows up, that's up 71 cents. Now, taken away from the NDX 100 on the way down, Green Mountain continues to have big problems. Green Mountain's down 382. You got Mattel down 71. Vodafone is off 54, and NTAP is down 47. If we go over and we take a look at, let's pull this baby up. We go look at Green Mountain. What you're going to see with Green Mountain is this. That little baby came off the high of 132. We've done we've done 4 gaps so far on the way down. I mean, there's been no relief in this equity. 157. Right now, you're at 90. If you take this and we put this on a monthly basis, what you're going to see is that the last time that we had any volume on the way up, you know, was at the 76 to 124 level. Now that level there, that brings you back to February 1st, the month of February. That month we did 132 million shares. We end up going dramatically higher. We went from 124 all the way up to 160. Now, you want to wrap your head around this, folks, and this is why. So when we got to the 160, well, for 4 or 5 months, anemic volume, zero volume. You're talking about no one's in the store, they're buying the product, and we're talking some months 28 million shares, 46 million shares, 27 million shares, 38 million shares, and then finally made a high with 39 million. Okay, so no one's in the store. That's pure distribution that's going out. No more buyers. Now, what do we have now? Guess what? We are only at May, 16th, 17th? Bottom line is that we come down and we already have not only volume, we got wide price spread. We've already done 48 million shares this month. So what does that set up? Well, we were going against, last time it had volume, was the February of 2014. This thing is going to make its way down to probably 72, and it very well could get into $50. Okay, so what you're going to see here, it's going to be basically a destroyed equity in the context that you're at 160, you get down into those lower numbers, and what I expect you're probably going to see is this, is that this is an equity that I believe it's either Pepsi or Coke. Let me just see which one it is here. Atlantic Industries, right? So I forget whether it's Pepsi or Coke that is buying into this. What I expect you're going to see, it's going to not only go under the buy point of where they've been buying in, it's going to end up going a lot lower, and then what are you going to see? What you're going to see, folks, they'll more than likely come in, take them out at a much lower price, period. Just take them out. You know, and that's just the way it goes. Some of the high volume stocks in this low volume market right now, you have Bank of America is up 18 cents. We have Cisco Systems is up 20 cents. Let's see, Chesapeake Energy is down 10. We have a target that wants to look at Valley, V-A-L-E. Valley is trading out right now at a price point of $6.75. We put this on a daily basis. Okay, so this equity here made a sweet run coming off the low. You know, first off, this is one of the largest iron ore producers in the world. The low for the year is 545. The high is 1493. It's trading at 675. You've done volume. You're down 37 cents. You've done 35 million shares today. You're coming into this wide price spread, accelerated volume off the lows. We had gone from a price point of 580, and all of 15 days later, we're at 914. That had finished exactly what it should have done on the way up. Now what it's doing is doing exactly what it should do on the way down. I suspect you're going to get a rejection at the $6.54 level. Right now, we're at 36 million going into the 76 million. It's a nice setup. You know, this is a hard one to buy right now because you're pulling back, but the bottom line is that the buy is there. If you take a look at this and we put this on a weekly basis, what you're going to see is that the week of the break top side, which is the week of the April 24th, we had done 227 million shares there. You got to a higher high with 274 million shares. You got to a higher high with 250 million. We're pulling back. If you want to see something that's really cool, thus far, we've only done 36 million shares. So 36 million is going against 227 million, and we're halfway through the month. So that little baby is set up not only to, you know, can you get down to 580? Yeah, you can. That's, you know, that's the beginning of the breakout. You know, we'll see whether it does get into that level. But this little baby on a short-term basis wants to go back up and test the highs that were generated at 914. Longer term, what you have, you know, up there is that the way this broke down, longer term, you have much higher price inside that whole texture. We go take a look at the 3M. What you do have, folks, which is pretty wild, inside the S&P 500 is this. There's many stocks inside the S&P 500 with the S&P at highs that the equities that you would think would be at highs with the S&P up at the highs are not. In fact, they're pretty far off the highs. 3M has been a consolidation for a long period of time. You know, it's at the highs. But what you have with 3M, and this is something you want to wrap your head around, your high that was generated out there is 169. That high was generated the week of in February. But you came off that high with volume. You know, you hit the high with 9.3 million. Then you come off the high with 15 million, and you come off the high with 10 million. You're going higher this month, so check this out. This is really bizarre. You're going higher this month when we take a look at it, and that characteristic is that you have 24 million thus far going against 53. Well, that's not that bad. 24 million still gives it a shot to do 48 million. We'll see whether it can get that baby going. We go take a look at Big Blue, IBM. IBM is right into the gap. IBM basically can't get out of its way. Yeah, you get buybacks all over the place, but they have wasted their money buying back the equity. It looks like they're going to continue to waste their money buying back the equity. IBM, when this had gapped down, the gap down was from October. You're right into that gap right now. The top of the gap down is 178.69. And when we take a look at this, whether it's in the daily or the weekly, you can see that it's an anemic volume. There's no buyers here. We went down with 69 million shares, and you're going up with 16 million. That is a problem for IBM. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials up 39. Nasdaq's up 33. S&Ps are up 8. Your S&Ps are at 2126. We'll see whether they can hold that 2122.75. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow right now is up 31, Nasdaq's up 32, S&Ps are up 7.5, and it's going to be a close call coming at this close, folks. If we go take a look at that E-mini right now, what you're going to see is this is always why we just hang at these highs. The E-mini right now is at 2126.25, and we're only talking 4 points here. And what you do have is that since let's see, the last 4 minutes, last 40 minutes, this thing has been pushing down. And what you do have, it was the first time the last 10-minute bar pushed down with actual juice inside it. So the bulls and bears are going to be fighting out here big time, because what you do have when you're at highs like this, so picture something. We have had 3 tops inside the S&P. So the bulls had plenty of time to basically get this up and over and break out and get it away. The bears have had plenty of time on the lower end of the consolidation, because bottom line, they drove it down twice, didn't stay down, you have the volume down there. So now let's just talk price. The further that you get away from a number, the more probability is that you'll end up going higher. We're at that number once again right now. And so this is going to be, I know it's 10 minutes coming into the close, but this is a big number. In itself, the actual, if we go over to the SPY for a second, what you have inside the SPY is that we're at 213.17, and that baby is up 73 cents right now. That also has had the first basically little sell down. That would have to come back almost all the way. But what you do have is that the future in this case, will basically dictate it. The biggest dictator, flat out, between the futures, the SPY, is the SPX, is the cash. The reason the cash is the number, folks, is the cash itself is what does not trade. So all 500 stocks have to be trading in order to get that cash number. So coming into this close, we'll see how this whole baby is shaking out. Volume-wise, what we have is that we're going to do, right now, we've done 492 million. So we'll do about 600 million on the NYSE, which is short volume in a huge way, no doubt about that. Inside the NASDAQ composite, that's going to ring in about 1.7, which isn't bad. Inside the actual ETF structures, the SPY is going to be anemic. Right now, we're at 58 million. The last high up here had 79 million, so that's basically not only anemic, but the highs that have generated, whether it's at 79 million, 72 million, that is not enough to sustain higher price on a continual basis. If you're banging out about 150, that'll be a different ball game, because that's what we have down the bottom. The 3 Qs, the NDX 100, that's even more anemic. The NDX 100 has 15 million right now. That's going against 31 million at its high. Let me get this up here for you. So that's going against that at its high, and it looks to me like the 3 Qs don't even look like they're going to be able to hold the high of Friday. And that in itself is going to say quite a bit, because the 3 Qs, we are at that 110.12 area. And if they can't even hold the 110.01 area, that's a problem, period. The IWM, said a little bit earlier, that has some juice underneath it today. The IWM right now is trading out at this 125.03 level. That's a decent level. What is surprising out here today is this, is that the market, isn't up a lot, but the bond market is down a lot. And what we did have last week is that when that bond market was going south, the equity market was going south with it. The dollar was going south with that. And that was a change of not only trends, but dynamics inside the marketplace itself. I suspect that that's going to continue. Why? Because more than likely what we're actually going to see is it's going to be the bond market that throws a wrench inside the equity market. It's going to be the dollar index that throws a wrench inside the equity market. For some reason, folks, what has happened is that the market now can't stand a weak dollar. For the long periods of time, the market couldn't stand a strong dollar. Then the market loved a strong dollar. Now what you have happening is that the market doesn't like a strong dollar anymore. It likes a weak dollar. So these different dynamics, when they're taking place, are really cool because watching the dynamic change, this is a big sea change. This is not a small change that has happened inside the marketplace. And of course, the real kicker is going to be like, okay, what and where are interest rates going to go? Now, interest rates don't have to go up that much to throw a spike inside the equity market and markets in general. The more I keep looking at this, I don't really see rates going to the moon. What we may have here is that what we're looking at is that the rates, the bond market, not the rates right now, the bond market itself may be jumping around enough to basically turn around and put some large funds in a bad position. That bad position would in turn push some selling into the marketplace, which in turns, basically throws huge volatility into the market on a short-term basis. What I've found last 30 years, it's the large currency moves that push the market around very quickly. Most of the crisis has always been whether it's the dollar or the bond market. That's how it kind of works. And what that comes down to is that it's positions that were laid out by large banks, large funds, or something else, that trouble started, and then all of a sudden they had to start selling equities, and that's where those dominoes start falling into place. So it's going to be wild watching this whole thing shake out because there's no doubt that the S&P is the third high that's up here, all anemic highs. No one's in the store. They're buying the product. And, guess what? Distribution at highs. When you come off those highs, it's fast, it's furious, the volume explodes, and we take a look at how the S&P is, when I take a look at how the S&P is set up, that S&P continues to want the October 13th low. That October 13th low on the S&P, folks, is insane. I mean, it's not only just low, it's a lot lower. We're talking right now, the S&P is at 2113. That high volume swing low, man. Where is she? Yeah, that high volume swing low is down there at 1912 to 1820. Big number. You stay right there, folks. We'll be coming right back. Dow Industrials are up 23. Nasdaq's up 30. S&Ps are up 6.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. Let's make it a great summer. Going to be kicking into a good spring and summer, no matter where you are in this great country of ours. This quote's by Richard Bach. To bring anything into your life, imagine that it's already there. Market-wise, let's take a look at it out here. We have the Dow Industrials up 26, Nasdaq up 30, S&P's up 7.5, Gold contract flat at $1,224 an ounce. Silver up 12 cents at $17.68 an ounce. Platinum up $7 at $1,175 an ounce. Copper down 2 pennies at $2.93 a pound. Light sweet crude off $1.90. No, light sweet crude down 11 cents, trading at $60.43 a barrel. Bonds. The bond market gets smoked with volume, folks. 10-year bond down 21.6, 127.11. 30-year off full 2 points, plus 9 ticks at 153.10. King dollar. King dollar up 1,080 ticks at 94.26. The euro down 141 at 113, and the yen up 76 at 120.01. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You had a new high, folks. Closed over the high. And guess what? That means you can go higher. We take a look at the SPY. No juice whatsoever. You're up there again. We had 3 tops up here. Each one of those tops had approximately 71 million. The first top that was established, which was on February 25th, that high was 212.24. You had 73 million shares. Then what do? You go downtown. We go from a price point of 212. We go down to 205. 205, you get volume out there of 157 million. So you get a high with 70, down with 71. You established the second high. The second high was established on the 27th of April. That high was also established with 79 million shares. We come off that high, same type of setup, come off that high, and we come down, and we came down with 135 million shares. Today you get over all 3 of those highs, because Friday was another top. Friday, you had volume of 76 million. Today, you get 71. Now, the further you get away from this consolidation, the higher you can go. That's the reality. No juice, but we've had no juice for quite a while. We'll see if, in fact, this S&P can get away from it. Thus far, we're not far enough away from it. Thus far, what you have is that the high out there is the 48 mark. You're 50 cents above it. That's not you, but you get $1.50 above it. Guess what? That'll be a leg up. There'll be some follow through on that. The NDX 100, the 3 Qs. If we take a look at the 3 Qs, this is what you have with the 3 Qs. 3 Qs are at the lows of the high. The 3 Qs are at 110.06. The lows of the high 110.02. Also, volume contracting. I suspect, we'll see if the 3 Qs are actually going to get to the 111.16 area. Inside the NDX 100, what we had out here today, what was taken away from it was Green Mountain. That was down 384. Mattel was off 67. NTAP was down 60, and Vodafone was off 53. And that's after, Altera put a huge amount of juice into the NDX 100, but just couldn't get it up too high a price. Altera was up 251. Discovery was up 118. We go to the small caps. Now, the small caps had some juice in it. Man, these small caps, when they move around, they love to move around. The IWM had an expansion of volume. We did 28 million shares. We went up $1.40. And the small caps came off those highs, folks, with a vengeance. When you came coming down, you came down hard. You came down with 72 million shares. We're up today with 28, which isn't bad, by the way, on the way up. We are at 125.04. What that does, though, just that level alone, the highs that are inside this IWM are 126, 126.91. You're at 125.05. Bottom line, yes, that can get tested, no doubt. Gold contract. What do we have with gold? Gold, folks, is an ABC structure on the way up. They can't basically push this baby down. Pretty amazing watching this whole thing shake out. What we do have with gold is this. Gold is at $12.25. We had out here today 111,000 contracts. We got to a price point of $12.32 and it didn't hold it. I suspect we're going to build some cars here. The cars we're going to be building is so that it can get up into the 12.46 area first. That's your ABC structure on the way up. More than likely what we're going to see, however, is that you're going to see that run going all the way up to the 23rd of January. That 23rd of January, that is pushing the 1301 number. And what we do have inside the metals, the gold and silver, folks, is that you had, let me see the silver market for a second, SIM. So inside silver, silver's trading at a price point of $17.69. Yeah, see, and silver's holding price, man. This gets interesting. Silver, always more volatile than gold. Silver is also holding price, though. Silver wants to basically run up, and I suspect will be the first one to get into this high that was generated out there on the 21st of January. That high price point is $18.50, and that's for silver. That's not a huge mark away from it. Bonds. What do we have with the bond market? Okay, so bonds, folks, looks like after a run of 34 years in the bond market, meaning a bull market in bonds, it looks like the turn is here. We'll see how this does shake out. If you look at the TLT, what you have is this. Now, the TLT is the 20-year bond fund. That came off the high of 138. We're at 119. It broke its swing point. The swing point we're talking about is the week of March 2nd. It broke it with vicious volume. We came down there with 48 million shares and with 61 million shares, and that was a 52 million. That was the swing point. So your setup is that you're going to get down to your next level. Your next level is about 116. If we go take a look at the 10-year, the 10-year bond right now gave it up on price today. We came down 22 ticks, which is not the end of the world. The counter trend bounce, however, in the 10-year, we only went from 126.04 up to 128 after coming down, straight down from 130. That's setting up, it looks to me like building cause to get below the March 6th level, which is the 125 area. If we take a look at the structure, we're at 2.2 in the 10-year. So if you want to get a mortgage out there, folks, go get it. You want to refinance, go get it. Bottom line, these rates are going to be given up whether it's 0.25% or not. I don't see a huge, number on the way up, but I certainly don't see the rates going that dramatically lower either. We take a look at the 30-year. What you have with the 30-year, there's a huge amount of movement in the 30-year. The 30-year was down 2 full points and 12 ticks. And by the way, inside the future market, folks, 1 point is $1,000. This is like a monster move. It's particularly when you look at the leveraged aspect of it, it's really a monster move because you're only putting $3,700 up inside the margin for $153,000. That's what a contract's worth right now. All you do is you take whatever the number is, and then multiply 100. That's what these contracts run at. The 30-year today, we came down with 200,000 contracts. We'll see how it goes into its lower swing point. Because, see, what we had is this. This would be different if it didn't try to get into its highs first. But both the 10 and the 30 were trying to get into higher price today, and they failed. So they failed. They come back down. So now what you actually have is you have a high at low volume. You're right next to the high volume low, and that's what we're going to be going after in both the 10 and the 30. In the 30, it's 151.04. That's the number that this baby is going to go after. So we'll see how that shakes out as it comes down into that number. We go take a look at the XAU, the HUI. Both the XAU and the HUI, folks, are building cause for higher price. So if you're in those metals markets, bottom line, the setup is pretty good right now. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Just call, folks. Want to know what's going on in your world. Dow up 26, NASDAQ up 30, S&P's up 7. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver. but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, folks, let's go take a look at Urban Outfitters. Urban Outfitters closed at $40.72. It's trading down $5 at $35.86. Let's see what they have to say out here. So, okay, first quarter, the estimate was 30 cents. They came in at 25 cents. Their sales comp, they expected to do 5.3% better. They did 4%. The revenue, the estimate was $757 million. They did $739 million. Anthropologie, they expected the comp for each store to be up 4.7%. It was only up 1%. So bottom line is that this is not only a miss, but this is a big miss. There's no two ways. So the equity itself, I closed at the $40 level. It's trading at 35. Let's go bring this back. We'll put this on a weekly first. Take a look at it on the weekly basis. And what continues to happen out here, folks, is this: you have the S&Ps at highs, and these equities are getting not only just down, they get smoked. And so what that means is that the underlying strength inside the S&P is not there. You certainly have enough of the weighting structures that is keeping it up, but underlying it, bad scene. Now, the way that Urban Outfitters is trading, you're at, oh, this is crazy. Yeah, see, you're at 35 already. And 35, what 35 is that that's where the downdraft occurred October of 2014. The high of that is 35.44. So if this croaks 35.44, what that's going to set up is $29. That's pretty intense. Allergent. Let's go take a look at Allergent Technologies. Allergent closed at $42.63. Put this up here right now. So Allergent right now is traded at $41.20. Let's see what they have to say. Okay, they saw year-end revenue at $4.06 billion to $4.12 billion. Now they see it at $4.05 to $4.11. Earnings per share, they saw 39 cents. Now they see 38 cents. Allergent itself, let's take a look. So Allergent has been in this consolidation for quite a while. Wow, talk about quite a while. This is really a trip. So Allergent's been in a consolidation, folks, going back just January of this year. Bottom line, Allergent wants to run down to this $38.77. So that's how that baby's shaken out. We have one of the Tigers want to take a look at IBB for a possible short position, and this good old IBB, folks, is just the ever-ready battery that doesn't stop, that, yes, does want to go down, but bottom line is that each and every time that this gets toasted on the way down, it comes all the way back. Now, the IBB is the biotech index. You're trading at 469 up today. You're at $360. I would wait for this to go up and test the highs of at least the swing point where we're at right now, and that's 365.21. What you'd want, you'd certainly want a signal saying that, okay, we came up to that high, we got over the high with lighter volume, and we failed. You want all of that. And the lighter volume that I'm talking about is this. I'm not talking about how we came off the high. On the IBB, folks, that was vicious coming down. It came down with 4.23 million. What you want to see, you really want to see it get to 368. And at 368, that last high, it only had 1.2 million or 1.4 million. You'd love to see it get up there, have lighter volume, then fail to go short. The reason being is that then you can put your stop right over the 374, which is the high, which that was the first place that it sold off. What I expect you are going to see is that, yes, that wants to go lower again, because when you look inside the marketplace today, as to the equities that were going up versus going down, it was the biopharmas that were absolutely getting killed. They were the smaller ones, though. And they got killed in a big way, not in a small way. You had Endo come down 5%. You had 11 biotherapeutics come down 69%. You had, let's see, give you a few more of these. It's the smaller one. Kite Pharma is down 7%. You had Juno Pharma down, it's only 1.4. Juno Therapeutics is down 5.9. There was some big hits. Those big hits, however, were the smaller biopharmas. I do expect that it's not going to be able to hold it, but make sure that money management-wise, you basically let that baby get all the way up to those highs again, so that the positioning that you're going to have there is that you're at the highs. The market's going to tell you whether you have a failure or the thing wants to go higher. And specifically, would it be let it test If it tests on light of volume, rejects the price, great. There's the setup. If it tests and holds the price, well, don't even think about it, because then it's going to go right into the high, the first high that was generated out here inside the IBB. And, of course, that first high that it sold off from is 374. And right now it's still only at 360. And the biopharmas, folks, the NASDAQ can do that, okay? You know, there's no two ways about that. Those babies can run, and they can basically run very quickly, because when they run together, they absolutely do run quickly. Let's go over and we take a look at an equity that can't get out of its way, folks, is Big Blue, IBM. What IBM continues to do, it's trying to get into this gap that it's been trading at for quite a while. Now, I suspect it's going to probably try to hit it. You know, the bottom of that gap's 178. We're at 173. No juice whatsoever, though. Last 3 weeks, just couldn't handle it. Couldn't handle it at all as it's coming into that level. So we'll see where that whole thing does shake out. Google is out there at 546. That doesn't have any strength. Inside the Dow Industrials out here today, what goosed the Dow up into new highs was Intel and Apple. It's pretty wild when you think about it, too, because Intel and Apple, you know, Intel's not a new equity inside the Dow, but it's not that old. Apple, of course, is a brand new equity inside the Dow Industrials. And remember something, that the Dow Industrials itself is a price-weighted index, okay? What does that mean? Well, it means quite a bit, because what does happen is that some of these Dow stocks have some really sweet price, no doubt about it, big prices. Those big prices, however, do a number on it as they come down versus going up. Okay, so there's a lot of twists and turns inside that. When you look at 3M is laying out there at 162. That has started to back off, you know, so I expect you're going to see more of these come backing off. United Technologies, that's at 118. That's off its high of 125. This is Tom O'Brien. This is TFNN. You stay right there, folks. Get our man, Mr. Kevin Hinks, coming from TD Ameritrade Thinkorswim. Kevin does an outstanding options show right here every Tuesday, 12 to 1 Eastern Standard Time. You want to understand options upside down, you want to understand strategies, right on your cell phone, tfnn.mobi. Kevin's going to be coming right back with you, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finish up 26, NASDAQ up 30, S&P's up 6.5, and as we do each and every Monday at 30 past the second hour, we get our man, Mr. Kevin Hinks, from TD Ameritrade Thinkorswim. Now, Kevin, folks, does the best option show on the planet. It's down here every Tuesday, 12 to 1 Eastern Standard Time. If you haven't test drove the Thinkorswim platform yet, come over to our website at TFNN. You can see the banner on the top of the side. You can hit that banner, bring up the platform. They'll let you trade with paper money. And it doesn't matter, folks, whether you're trading equities, futures, currencies, or options. It's on one platform. I use it each and every day, have for years. I had the pleasure of meeting Kevin last week. Kevin Hinks, what's going on, brother?
How you doing, Tom? Good to talk to you again.
And you also, man. First off, I really want to thank you for doing the program. And, what I'd like you to do is just let the folks know the type of experience that you have.
Well, I can tell you this in terms of a historical date. The first week I started trading options on the floor of the CBOE was when the shuttle exploded on takeoff.
Oh,
so that was January of 1986.
Wow.
And I've been on a seat trading every day since then.
That is so.
I've never been off a seat.
You know what's so cool about Thinkorswim and I mean, they own that business, right? I mean, as to real traders, real strategies, it's intriguing, isn't it? I mean,
yeah, they got me. The guys at Thinkorswim got me to come here it was real easy. They showed me how great their platform is.
Yeah.
I mean, this is a platform built by traders, built for traders.
Right. And folks, no matter where you are in the world, okay, remember that you can get the program right on your cell phone, tfnn.mobi. That's the bottom line, okay? You get the full audio. If you want to get the TV with Kevin's charts, TD Ameritrade, the platform, no problem. Just go tfnn.com and you'll see the little box right beside it with mobile devices. Hit that. Our servers will know exactly what type of device you're on, and you'll get the charts as well as the audio delivered to your device. Now, so what are we going to talk about tomorrow?
Well, Tom, tomorrow, since we're moving into the summer months, and with the all-time average in the VIX of 15.39 and currently trading 1273, we're going to talk about low volatility plays and things that you can do getting ready for the summer months.
Yep.
In the summer months, a lot of time things dry up and you don't get as many choices as you got to make, and so you got to make some decisions. You got to look forward. Something to. I used to write on my trading card this time of year: don't buy summer. Don't get caught buying this low volatility in the summer. So we want to get you situated, ready for the summer months, and get the right play on with calendar spreads.
Folks, what Kevin's saying is so important, and I know everyone's itching to trade. And you know what happens, Kevin? This is wicked. Sometimes people have more time in the summer. Their kids are off school. And I know right what you're saying, man, because even, when I was younger, I'd have more time and I'd want to trade, and I'd realize that, oh, man, everything flattens out. And it's like, oh, man, all of a sudden.
Spreads.
Yeah, there's no doubt about that. Now, hey, I'm going to switch gears on you for a second, okay?
Sure.
Because I know you're doing the option show, but we have a lot of futures traders out here, okay? And so check this out, folks. This is how cool this is, okay? When I left Kevin, right, he was trading grains, okay? I met him in the middle of the trading day, okay? No, this is so, because see, you're talking to the right audience. I mean, and what happens, so talk to us about grains, because you're just going to make a whole bunch of people happy right now.
Oh, I mean, I've been trading grains consistently through 2005 when I started trading grains. So I stood in the soybean meal pit just trading futures and future spreads since 2005. Wow. So I was one of the last guys to shut the lights off as we left the building.
That is amazing.
So I trade grains every day. I trade grains every morning.
So what do you think of the grain market right now? We've had, when I left you that day, right? I jumped on my phone, man, and I was watching, wheat. The beans weren't hitting yet. The corn wasn't hitting yet. The beans, the wheat was hitting, and then all of a sudden, the wheat was hitting. Now the beans seem to be coming off, and corn seems to be coming off. Where do you stand there?
Today was a very strange day in the grains, because normally I use a lot of triggers when I trade the grains off of the dollar.
Okay. Oh,
and with
nice.
the dollar up and grains up today, that's a counterintuitive trade there.
Oh, you know what? You had music to my ears. You know why? Okay, so check this out. I trade the dollar a lot, and I trade gold a lot, right?
Sure.
And what's so intriguing, man, even this run on gold, when the dollar was high, gold wasn't getting killed like it should have. Do you know what I mean?
Sure.
And it's like, okay, so now I'm looking the same thing. Today, what Kevin's talking about, folks, the index itself was up 1,000 ticks, okay? And that's going against the euro, which is 60%. And gold was flat. And so I thought the same thing. I'm saying to myself, okay, man, this dollar looks like it wants to go to lower price. I mean, counter trend bounce a bit, but it's going to be wild watching this shake out.
Yeah, the minute, did you notice, Tom, the minute they started calling for the end of the dollar rally, it picked up again.
Yeah.
And it was really strong today. And even though the grains were all up across the board, and oil, even though the Saudis admitted that they're pumping more oil out than their record numbers in 2005, oil held in there, and the grains were actually all up today.
Yeah.
Very strange.
No, that
action
is.
against the dollar.
That is. There's no doubt.
But don't get me started on grains. We could talk about grains for days and days.
No, hey, listen. We feel so lucky having you, man. Because there's no doubt that options I've seen have really taken over the world.
Yes.
The difference, folks. Okay, So just when we talk options, folks. Okay. If you trade the SPY, guess what? You're at $213, okay? And the options on the SPY, this is hard to believe, actually you're a penny to 2 pennies wide, and you're talking in the money options at $3 versus $213. It's amazing, isn't it?
Yeah, the way the markets are now and the way the markets have evolved in the last 10 years, I compare it to being in Las Vegas, except you get to walk around and deal.
Yeah, no, I agree. There's no doubt that you can actually beat, you are the market, folks, because something to always remember, on the Thinkorswim platform, you can be the bid. This is not, you're not putting an order in saying, okay, I'm going to take the offer. You can be the bid at all times. You can be the offer when you're coming back out the other side, which is really important to understand.
Right.
Well, listen, man, we really look forward to the show tomorrow. We look forward to all your experience, and we just feel so lucky, man. So,
all right, Tom. Can't wait to talk to you guys.
Okay, have a great one, Kevin. Have a safe one.
All right, talk soon, buddy.
Thank you. And that show, folks, is at noon tomorrow. And, folks, bottom line is you can't buy that experience. That's where this whole thing shakes out. Now, what was intriguing, and you can see how what does happen is that what I picked up inside that, of course, is that they closed. I believe they closed the grain pits. Actually at the SIBO. Bottom line, guess what? Go from the grain pits, then you going electronically, and what you do have there, folks, is that you have someone with that type of experience that will walk you through what type of triggers that they are looking for, because what happens inside the option market in general is this. You don't basically, you can trade whether it's puts or calls off swing points, okay? That's minimizing your defined risk at all times. The spread aspect is huge. The reason being is that what you want to do, one of the mantras inside the option business is this, is that you are waking up every single day and the decay is working in your favor. That's the Thinkorswim folks in general, their larger strategy, and I don't put words in Kevin's mouth, but he'll explain to you how he feels about options and how they should be structured. Whether you're in a bull or a bear, the decay value is a huge value, because what ends up happening is that you could be right or wrong about the aspect of where something is going, and the decay value itself is going to help you inside of that trade. And that's where they are absolutely just great educators. If you haven't test drove that platform yet, folks, come over to our website at TFNN, hit the banner, and go test drive it. There is so many lessons out there. They have swim lessons themselves each and every day that can teach you not only how that platform works, but how much is on that platform. I learned a huge amount because I was out there with them in Las Vegas last week, and I went to a couple of those swim lessons, and they were fabulous. And let me tell you something, I learned something about, and I've been on that platform forever. I've been on the platform, I think, for at least 12 years. And I knew it was a great platform, but I actually didn't realize how much they actually have on it. This is Tom O'Brien. This is TFNN. You stay right there, folks. Coming right back. Dow Industrial's up 26, NASDAQ up 30, S&P's up 7.5. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Take-Two Interactive Software. That closed at $24.24. It's trading at $25.70 right now. And let's see what they have to say. So let's see. Take-Two Interactive, maker of Grand Theft Auto, reported fiscal fourth quarter earnings that beat analyst estimates on the strength of its shoot-'em-up titles. Profit, excluding some items in the period ended March 31st, rose to 49 cents a share versus from 49 cents from 21 cents a year earlier. That compared to a 28 cents average estimate compiled by the Bloomberg. So let's see. 40, that's a good sized beat. So they planned on making 28 cents. They made 49. The latest edition of Grand Theft Auto was, as well as Evolve, a shooter game released February 10th. Fans who ordered that $60 product digitally using their Xbox got one to start further along in the game than those who bought a traditional disc. Bottom line is that they got some numbers here. So we've gone from 24 to 25. The company forecast the sales of 325 to 350 million and earnings per share of 25 to 35 cents. That being said, though, here let's go take a look at this. I believe what's going to happen is that on the what they announced is that the Evolve is making them some real bread, but on the yearly basis, they still are not going to come in with the numbers that they felt they were going to come in with. And if we take a look at what you have here is this. Take-Two went topside October. Let me put this on a weekly for you for a second. But we're going to see a lot more numbers come out tomorrow morning. I'll give you some of those numbers, folks, in a few seconds here. So what you had is that the week of October 2014, Take-Two went from 21 to 26. Had some juice behind it. Not enough, however, though. You were jumping over a 30 million consolidation. You did it with 14 million. However, that being said, you went from 21 to 31. Now back to 21. Well, back to 24 again. This little baby is probably going to lay out against the 2198 area, which was the bottom of the break topside. That's how that seems to be laying out at this particular point. Tomorrow, when we take a look at what's happening out here tomorrow, you're going to see quite a few numbers that are coming out. Before the bell, we have Dick's Sporting Goods, Home Depot. That's going to be one to watch. TJ Companies. That's going to be one to watch, particularly because each and every one of these retailers that are coming out are just getting smoked, folks. It looks to me that we must absolutely have enough clothes and everything else you'd normally buy at retailers. I think the aspect of digitally and electronically, that's where all the money's going. It's not that people aren't spending money, but that's where it's all going. So TJ Maxx, that's going to be an important one to watch, particularly because what you have with TJ Maxx is that you have some of the Marshalls, you have they have a couple other discount ones. They're all basically discount ones that have some decent goods. So if that's going down also, you know that we're spending money on services and we're spending money on electronics versus spending money on clothes. After the bell, you got Analog Devices coming out. That's ADI. We got Autodesk coming out, ADSK. Computer Sciences coming out. We have QIHU 360 coming out. So there's going to be some action after the close out here. What I expect you are going to see tonight is this. If we take a look at Asia first, we take a look at what we have happening in Asia, because Asia will be opening up in another 2 hours. If we go over to the Hang Seng first. The Hang Seng has been on a run, no doubt. Hang Seng is trading at 27,000. Put some volume onto this. Take a look at where we're at. So this has been, this is on a monster ABC up. This is going to be wild watching this shake out. So this baby here, when it broke topside, let me just see how this was. If I take this one, actually I'm going to put this on a monthly. Okay, so on a monthly, oh yeah, you broke topside, man. On a monthly, hey, the Hang Seng wants to hit the high. That's 4,000 more up. That's what you have. And you know what's so wild about this? the Hang Seng, now this is what's really bizarre. The Hang Seng is a high volume high. Man, this is pretty cool. So when the Hang Seng made the run in 2003, the Hang Seng started at 8,500 and just didn't stop. You know, it was a 1 to 2 ABC structure on the way up. That's why it blew up. But guess what? It's volume up at that high. So the low of the high was 26,700. We're already into that by 1,000 points. So the Hang Seng can make that real easy. Now you want to watch that like a hawk, because the Hang Seng is going to tell us a lot. I mean a lot. The Nikkei, let's take a look at the Nikkei, NKY in Japan. The Nikkei, of course, you had come off that bottom with a vengeance. In fact, Steve Rhodes and myself, that's when we used to do the program together, and that was all about the yen. The yen was making a 35-year U-turn. What you have with the Nikkei right now, that little baby is, look at that, man. That's trading at the 19,000. You're off the lows of, 6,000. That Nikkei wants to run to 20,800. We'll see whether it makes it up. Now, the DAX and then the FTSE. FTSE today in London didn't have any juice. Sideways move. FTSE in London looks like it still wants to go to lower price. The DAX in Germany is important because how the DAX trades, that's how like the NASDAQ likes to trade. The DAX in Germany looks like it wants to go a little bit higher tomorrow morning. You know, we're at 11,594. That can hit 11,674 in a heartbeat. So, in the 674 is going to be important. Now, this is cool, folks, because the 674 is going to be important because that's how we came off the high with volume. The DAX had made a high on the 13th of April. That high was established at 12,388, had volume of 62 million. 5 days down, big volume. Had volume of 136 million versus 62 million. You go sideways, next leg down, volume again, 134 million. So what we're going to be looking for tomorrow is that as you bounce higher, is that going to be bouncing higher into this 11,674 with lighter volume or with heavier volume? You bounce with lighter volume, that would say you get a rejection of price at that level. You back down, that would be saying you're going after these lows again. If we go over to the dollar index, as Kevin and I were talking about the dollar, folks, is what moves everything around. And the dollar looks like it's a very large ABC structure on the way down. We're at 94.22. Yeah, it can go a bit higher before it goes lower, but not much higher. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow.